Hey there, welcome to Yo Knows and Yo Knows Ross Deal. Hey Ross.
Hey, how are you doing, Yalanda?
I am doing awesome. I am so much better since you're here. Thanks for joining us.
Absolutely.
Yeah, so I know who you are, but just give everybody that's watching a little background. So first, I did say your name was Ross Deal, and you are a...
But yeah, I'm a commercial banker here locally in Huntsville. I've been here for about 7 years, grew up in Decatur. Spent my entire life there, spent some time in the Shoals, but basically my entire career life has been spent here in North Alabama.
Okay.
Got a couple of girls, got one on the way, got one due in March, so I'm going to be a girl dad, too, so I will be surrounded. But I am a commercial banker, work for People's Bank. We have a new location off Balmoral. Next to Airport Road, and we've been here about 2 years.
Okay.
But I've been in commercial banking for approximately like 16 years.
Oh, wow.
So I've had several different roles, but most of that has been in lending. So it's it's fun because you get to deal with not just people, but obviously their businesses, and it's good to be here. Huntsville's a great area to be to work in.
Yeah, I love it here as well. So what made you decide to get into finance? You said 16 years?
16. Do I look that old?
No. That's why I'm like 16.
Yeah. It really started when I went to Auburn. Started out in civil engineering. Wasn't really the path that I thought that I would wanted to go down, and ended up swapping to finance. I thought business was really interesting, and came back home and worked for a small community bank that was a startup here locally in Huntsville, and started out in operations, and then kind of gravitated towards the lending. Just because it's it's just really interesting dealing with like all the various different like small businesses, and just you're not just in one segment, you're not just one specific business. There's just so many different types of business and how they generate their income, and so it's just really interesting, and that's what makes it fun being a generalist in commercial banking, is that you kind of get to see it all.
Yeah, so you get to have fun with all types of clients.
Absolutely.
Yeah, so I do know did you start off in accounting, right?
I didn't know it.
Accounting wasn't your thing?
It was not my thing. No. It's your thing, right?
Yeah, accounting is my thing. I
Yeah.
love numbers. I'm a numbers nerd. If anything can be done in Excel, I'll do it in Excel. It could be done in Word document, but I'll still choose to do it in an Excel.
So what other talents?
Oh my goodness, I am multi-talented. So I started off in cosmetology.
Okay.
Yeah, so I'm a licensed cosmetologist, and then I got into accounting. So I have an accounting degree from University of Missouri, St. Louis, and I did that for a while. I worked for the Army, so I worked for DFAS, Defense Finance Accounting. So, doing foreign pay. So we paid all the foreign vendors that were supplying things for the Army. I've worked for the U.S. Army as an auditor. I've worked for the U.S. Army as a financial specialist, where we coordinated and we were responsible for all the government travel cards in Europe and Africa, all over there. So, and then real estate. Yeah, so it's like all of my careers have kind of overlapped to a certain extent. So I love the cosmetology because it makes me approachable. I can relate to anybody, and then the numbers nerd, and then business. So I feel like when I put all those together, it makes me a triple threat.
You know people and numbers.
There you go.
That's powerful.
Yep. All right, so you guys, I want to encourage you, if you're not, follow Ross, because he has a great page and you get to learn more about him. So what's your social media?
Social media, I'm just, you can find me on LinkedIn. Just pull up Ross Deal. That's like Let's Make a Deal,
Yeah.
DEAL. Just pull me up on LinkedIn, learn about my page, learn about what I do. I try to go to different events in the community, try to promote different businesses that are coming to the area with chamber, and go with the ribbon cuttings. It's just a really exciting time in Huntsville because there's always something popping up. There's always something new that's going on, and so just try to find my page and see what's going on.
Now, before we cut, I do want to just give the people some of the specialties, because you are a generalist, so you can help with different types of financial needs for a business. So what type of services are you available to offer?
Yeah. So like commercial real estate, transactions, I mean, CRE is typically what we like to do. Those type of transactions are, they stick on the books a little bit longer, but they're big needs for those clients. But that's primarily what we do. We do obviously like lines of credit. There's cash management in banking, which lot of different things that's involved in cash management. But yeah, obviously, business checking, money markets, the deposits, those are things. But obviously, the lending side is probably one of the most exciting, aspects of what banking does, because being able to, help somebody acquire a piece of property or even grow their business, that's something to kind of be exciting to be part of.
Exactly, I agree. So you guys, be sure to check Ross out if you need a business loan. You need to know more about commercial business loans. You need to learn more about business lines of credit, or even to open up a business bank account. You guys know Monica and I talked about that over on Yo Royal Academy about how businesses need business bank accounts. So you guys, thanks for tuning in, and we'll see you later. Continuing with our conversation with Ross Deal of People's Bank, let's get into 1031 exchanges. So do you want to give a little background about what a 1031 exchange is?
Yeah, 1031 exchange is, it's a transaction where you're selling a previous property and you're rolling it into a new piece of property. The banking end, we treat that as, it's a normal transaction, a normal loan for us, and nothing really special that we have to do on our end. But there are some, very key things that you'd really have to abide by. There's rules that you have to go by with a 45-day period. Once, you decide to sell this piece of property, you're going to roll this money into another property, you have 45 days to find another property. And so that's where it's so important to know somebody like you to be able to go out there and find them that next property in order to roll that money into it.
Right, and so that's the whole point is Huntsville has an inventory problem right now.
Absolutely.
There is a lack of inventory, and so as agents, advisors, even for yourself, it's like, how do we get more property on the market? But because we know it's sitting, and so we came up with this idea, let's try to encourage people who are just sitting on property, they're not doing anything with it. Let's educate them about a 1031 exchange. That way, they can sell that property, and I guess not somebody that's just looking to sell a property, but somebody that's interested in upgrading their portfolio. So that's what we're interested in, someone that is ready to upgrade their portfolio, and we can accomplish that through the 1031 exchange and get a loan on that other part that they might need to upgrade the portfolio.
Tax-free.
Tax-free? No, it was deferred. Tax deferred.
That's right.
I'm a cat.
You got to cut that out right there.
No, that's perfect, because that's what we do.
Right.
We're human. We make mistakes, but so it's deferred.
Kicking the can down the road.
Yeah, that is the perfect analogy for it. You're just kicking the can down the road, and that's a great segue, because I wanted to just kind of hit on the fact that it is deferred. So you eventually have to pay that money, and so that's why we have to make sure that the next investment is going to give you a great ROI, so that when you go to pick up the can, it's not full of something that's spilling out on your leg.
Right.
Yeah. Okay. So you say if they want to upgrade, and we do this with a 1031, the loan process is basically the same.
It's the same. Yeah.
Okay.
Yeah. The two key people that you want to be in touch with is obviously like you somebody that's finding the next property for you, but obviously attorney, and obviously your accountant.
Yes.
So yeah, it's really important to have those members, the people, the team that you've assembled around you in your business. It's important to have those people around you during this transaction.
And I'm going to plug myself even more. I want to sell the first property for you, because I have people waiting. They need warehouse space. We need flex space. Were you at the meeting with the mayor where he talked about how they're trying to make Huntsville more attractive for AI hubs?
For data centers.
So we need warehouses for those.
Absolutely.
So we have a real need, and we know there's warehouses sitting. So can you take us through the steps that they would need, like some of the basic documents that they need to come in and sit with you for a loan?
Yeah, so like what would you need, to go get a, commercial line of credit, to do a construction, or to even go get a commercial real estate loan for a commercial banker. And, the first thing you got to do is go find, you got to have a banker in order to, assist you in the process. But it's just important to have a relationship. You may already have a relationship with somebody, and that's great. But knowing them, getting to know exactly what your vision is for your business and what you want, it's really important to have that banker, and that can be small, medium, large, bank that you're interacting with. Because obviously there's a number of different transactions and different property types that you can buy or finance. So each bank has a different need, and so it's important. They call us like buckets. Some banks have a bucket, and that bucket may be full, and so it's really important to have not just one relationship, but have several relationships, and so have several bankers that understand what you're doing.
I was going to ask you that, should they shop around for rates? But in this case, they're not really shopping for rates. They're shopping for a lender who can actually complete the transaction for them.
Yeah, absolutely. I mean, shopping doesn't always necessarily mean, getting the absolute best terms, but you're really shopping, for the person.
Okay.
You're shopping,
okay.
You're shopping for somebody that, that you gel with, that you got, you mesh with, that you get along personally with, because, you're going to know that person, not just personally, but, obviously professionally, and, finding the right person can really help you grow your business to the way that you want to do that.
Right.
And so it's really important to find that right person.
So what type of properties, or is there, I know you're a generalist, but is there a niche or a type of product? What type of client are you looking to service right now?
I mean, we don't really have like a specific niche. A lot of times your larger banks, they have a specific niche, or maybe this lender has one industry that they focus on, but we really don't have a specific niche. Probably right now, and again, it's cyclical, so there's like different, cycles of banking and industry trends that maybe, this particular trend is not as attractive. And, right now, I mean, just the size of our bank, we just don't do historically a lot of like tract home, spec home building. We just don't do a lot of that. We don't do a lot of like land development for subdivisions. We have some of those, and those are great. But historically, what we've really been about is we're commercial real estate driven, and so that's primarily what we focus on. And that can be warehouse. That's maybe like a data center. Medical, multifamily. There's so many different types of properties that you could lend on. But anything commercial real estate related, that's what we're looking for.
Okay, all right. So can you tell how can people contact you if they're looking for a lender and they want to get to know you better, learn more about you and People's Bank? How can they contact you?
Yeah, absolutely. They can email me directly. It's probably the best way, or my cell phone. It's RDeal, spelled RDEAL, at peoplesbankal.com. Or call me, 256-836-4848. If you don't get me, always return your call.
Yep. Or I know how to get in contact with Ross, so you can hit me up too. Thank you, Ross, so much for giving us some information on commercial lending. Yep. And we look forward to talking to you again.
Sounds great. Obviously one of the big items is down payment, and based on even a beginner or expert at acquiring commercial real estate. Based on the asset type, there's different requirements for down payment.
Yeah, I get that question a lot.
Yeah.
How much do I need down? People, they think they can get a no money down loan like they can on a house. Absolutely. And then they automatically jump to SBA. Yeah,
and I mean, a lot of people want to go through a conventional workup where SBA is not involved, just because there's not as much paperwork involved. It is a simpler and a faster transaction.
Okay.
Just having that down payment and knowing what that is in advance really allows you to plan, to budget in advance of that transaction. And that differentiates between different properties, because some properties qualify for different financing, and so from little 15% down, you may have as much as 35% down. Okay. And so there's some wiggle room. There's some whether based on your financials, your strengths and your weaknesses, they may require more, may be less, maybe the exact amount that's required of that underwriting guideline. So, but it's kind of a moving target on that portion of it. But credit score is obviously one that's it's your personal credit score that just kind of tells you a little bit about you and what kind of good credit that you have, and knowing that, and having a good track record. When you're building a new relationship, it kind of shows that lender, hey, I have good credit. I have a good track record.
I pay my bills.
I pay my bills. I can repay this loan.
Yes, I will.
Yeah.
I will repay you.
Absolutely.
I'm capable and willing.
Yeah. And just, financials.
Okay.
A lot of people, having, a good accountant, and having a good understanding of your financials, whether that's personal, business tax returns, a personal financial statement. That's just your assets, your liabilities, and what your net worth is, and being able to, itemize and provide a detailed personal financial statement. Having that in advance and having that together, it does make the process go so much quicker.
Okay.
And, a lot of the process, especially depending on how complicated your deal is, but having that ready and having that in advance, it really does eliminate, because the collection time can be kind of lengthy.
And that is exactly why I tell people, just like in residential, I don't show properties until you've been approved by a lender, because otherwise we're just window shopping.
Sure.
And I can't fill up my gas tank on laughter and hugs. I give a lot of that away, and it doesn't repay back.
They're free.
They're free, yeah. They don't have any return except for the emotional part about it. Okay, so that was great. That was great. So can you walk us into expanding on that, but less related to someone that is starting a business? And I say that because I always want to relate whatever I'm talking about in an interview or my social media, what I'm currently seeing. And right now, I'm seeing people who don't currently have a business. They're not operating their business to the point where it's generating a profit or maybe even bringing in revenue.
Right.
And yes, those are different. A lot of people use them interchangeably, and they're not. But they call me, and now they want a brick and mortar. And I'm just like, my heart sinks. Because of all the things you just mentioned, that they're not prepared, and I always feel like I'm the person that pops the balloon. What type of advice do you have on the lending side to help them be better prepared for when I send them to you?
Sure. I mean, depending on the customer, I don't know how long that they've been in their business, but you hope that they've reached that point where you're 3 to 5 years in.
Okay, so that's the sweet spot. Yeah,
you're turning that profit.
Yeah,
you're not in your first year.
Okay,
from a credit aspect, it looks riskier, right? If you just start a fresh business, maybe that's your primary income, your primary business. That may not be like the best conventional financing, from any small community bank. That may be an SBA opportunity for somebody to look for. And, some of your local banks can work with, either they have some internally, that they offer, or maybe it's a third party that they're working with to help you get that SBA financing. But, if you are past that and you are profitable, if your business is past that threshold, and it's going to the point where you do need to grow and you do need that brick and mortar, then obviously the things that we have spoken about, having those financials, having that credit score, having that down payment, because I feel like down payment's probably, it's the largest capital expenditure that you're going to experience for a small business owner. Injecting that that capital, that down payment, into that brick and mortar, into that building, it's a lot to take on. And so preparing yourself and knowing what target to shoot for that down payment, it's important, because sometimes if you know exactly how much you're earning, what your bottom dollar is, you know how long it's going to take you to get to that point to earn that and to have that ready for that brick and mortar expansion. Okay,
so sweet spot, 3 to 5 years, have your financials, all that.
Yeah.
All right, good. So we talked about if somebody that's freshly starting, you said the sweet spot was 3 to 5 years, but they need a business license. So, sometimes they might need funding for different things, so let's say, for instance, they need a mortgage and they need money for inventory or something like that. Like, what type of advice or suggestions do you give for someone in that situation?
I mean, you're just referring to like a commercial line of credit.
Yeah,
so like there's two aspects.
Like their new business, and like, hey, I need a brick and mortar, but I'm also going to need a little bit of money for this as well.
Yeah, well, I mean, probably the easiest thing, in the short term is probably, business credit card.
Okay.
That's probably the easiest thing. It's probably the the easiest thing to probably, qualify for. Obviously, you're having to, pay that on a monthly basis. And so,
Yes.
Ideally, you would like to be able to, pay that off each month and growing that. But, obviously there's another product, just getting a business line of credit.
Okay.
And so that's more of a short-term product. We've talked about, acquiring a piece of property, a building, or doing a construction loan to build a building. Those are long-term transactions, long-term products. But a business line of credit is a short-term. And, that's either secured or it's unsecured.
Oh, okay.
And so, secured is just, something that, a customer or borrower pledges in order to obtain the business line of credit. And that can be in the form of real estate.
Yeah, okay.
Which allows you to have a longer maturity. Or, it could be unsecured.
Okay.
So where it's not tied to any specific asset. And so, those transactions are typically, 12 months and a shorter span, but obviously it's a little riskier. So, the rate may be slightly higher on something like that.
Gotcha. All right. So they can come in and get that business line. All right, cool. So let's talk about construction loans.
Let's do it.
I have someone, they call me up and I tell them how much the property costs and they say, I can build it for cheaper.
Can you now?
I love the smirk. There you go, because we both know it's probably going to come about the same.
Yeah.
It might come out more because once you finish adding all the bells and whistles, all the finishing. So let's get into construction loans. Let's just be honest, because we're going to keep it real for the people who are actually asking me this. If we're going to keep referring to the person that's just starting out, they have not hit that sweet spot of 3 to 5 years, right? But they think in their mind, it's going to be cheaper and faster for me to build it. What advice or tips would you have for that person that has not hit the sweet spot in growing their business yet, but they have this great idea to build from the ground up? And it's going to be cheaper than buying.
So they haven't hit that 3 to 5 year. So they haven't got to the point where you're like an ideal candidate. It's just something to shoot for. Yeah.
You be the bearer of bad news and not me.
Not going to happen.
Okay.
No. Just, kind of what we've discussed, like previously, just knowing your financials, knowing what your business is generating, and having an idea of what you're able to put back in order to make the project a reality. And so putting back means, providing the capital in order to put down, for that down payment. And so having that and being prepared to put that, having a plan in place so that you do know that when you do arrive in that 3 to 5 year period, that you're prepared, to put in that capital.
I think you hit on something. For me, it was inadvertent. The ability, like if they haven't really grown the business, they don't really even have the capital or the money to do the down payment.
Yeah.
Okay.
Yeah. I mean, doing a commercial, construction line, to build a building, typically, that's it's a riskier transaction.
Exactly.
Right?
Yes.
Because you're building something that's not there. So the bank wants to make sure that that's going to get done.
Yes.
So you want to deal with people that have done that before, that are seasoned, that are veterans in their industry.
Thank you.
Yeah.
I've said that, and it's always better and it's different when it comes from someone else, because I've said that, and it's kind of taken like, oh, well, you don't want to help me, and that's not the case. It's just based off of...
You want them to grow.
Exactly, the right way.
You want them to get there, but they're not there yet.
They're not there yet. And that's why I have relationships with lenders where they can talk to you and create a plan, a business strategist where they can talk to her and create a business strategist, a growth strategy to see where these numbers lie. Yeah. Okay, so let's get into the construction loan itself. Like, what does a borrower need to do to qualify for a construction loan? And then we'll get into the details of the construction loan.
I mean, the main things you gotta have. I mean, you gotta have financials.
Same thing.
Same thing. You gotta have good credit. The down payment part of it. That's going to be different based on what you're building. What the asset, what the property type is going to be. So that's all the same. Now, how the loan is structured is entirely different.
Okay.
So, like, if you were to, let's just say you're going to, buy a piece of property, bare land, going to construct a commercial building on it. You're going to start from scratch. You may be looking at a 12 to 24 month period, right, to construct it.
I think I'm just going to start three-weighing you.
Yeah, let's do it. Tag me in.
Let me get Ross on the phone so
Yeah,
he
yeah,
can
yeah.
tell you all this.
Yeah,
Okay.
yeah.
Okay.
So you're going to do that from, a 12 to a 24-month period. That's likely going to be for the, for the bank, you're going to try to align that with the construction period, but in a way that once they're done, based on what the asset type is, say they have tenants, and it's an income-producing property, that they're able to get that property leased up and earning income, and to the point where, they're able to repay that once the P&I starts. And so that
Tell the people what P&I is.
P&I is just principal and interest.
Okay.
So once, you have completed that construction in 12, 18 months, but maybe you have an interest-only period for 24. Yeah.
So interest only during the construction period.
Interest only from the, the construction period. And so you may not know this, but when you do close on a construction line, depending on if it's purely a construction loan, say your loan is $1 million and you haven't drawn one penny out yet, obviously you're not going to be being paid interest on that until you draw the money out.
Gotcha.
But once you do draw that out over a period of time, you have a draw period, say it's 12 months. Once that's over with, your P&I, will start based on, what the bank, your banker establishes. And so, at that point, your loan is going to be calculated, your payment's going to be calculated on an amortization period. And on buildings, you're looking at 20 to 25 years. Maybe you wanted it less, but, 2025 is a pretty standard amortization period. But yeah, you're going to have inspections along the way that makes it unique. Even before you even get to the point of constructing, there's planning involved. There's architects, there's contractors, there's plans, there's legal.
Environmental surveys.
Environmental, absolutely.
That's the word.
And sometimes they find things.
Yeah.
And it's not just, it's not really for the bank. It's really for the, it's really for the, the customer. So that, yes, there's risk associated with buying this property and finding things that you don't know until you do buy.
Yeah, and having that extra reserve to now
Exactly.
deal with whatever the contamination or whatever is.
And just having like a little bit liquidity during the construction period. So, let's talk about overages. Most, construction, loans, they can't go over, and so.
Oh, so you can't come back and say, hey, I need $1,200,000.
Well, there's some things that are unforeseen. And so, and, they may have to come back. And obviously, yes, if there's more work, there's more things that go into that project.
Okay.
Then you can have it reevaluated to see if it appraises for more than it originally did based on more improvements that you did during the construction.
Okay.
But as a backup, it's always good to have more liquidity in case, the appraised value doesn't change. And so at that point, your property is under collateralized. And so from a bank's perspective, that's, not good. It's not good. So, but yeah, the construction line, it's very similar to qualifying in the same ways of getting a traditional commercial purchase or commercial building that you're trying to finance. But basically the structure is a lot different.
Gotcha.
Yeah.
So now the business is open and now it goes into the P&I principal
That's right.
and interest. Okay.
Yeah,
Sounds pretty simple.
it is. But it's a marathon though. It doesn't happen overnight.
Building, That's tough. All right. Thank you, Mr. Ross Deal.
Yeah, the real deal.
See, we're coming up with taglines just
that's
left
right,
and right.
that's
Just
right.
hit about the park.
We talked about the construction line and a few aspects of that, but really, you can apply this in construction, line that you're building a building, or maybe you're just acquiring a piece of property. But, the cost aspect from the borrower to obtain the financing.
Okay, yeah.
So like origination costs.
Yes.
That's a big piece, and we're talking about structure.
So
before.
just to break it down so
Yeah.
that people really understand. So in addition to the down payment, there are
There are
additional fees.
There are, yeah.
So it's not just about the down
Yeah.
payment.
Yeah.
Okay.
And so, the bank's gonna have origination fees. And, there's some, negotiation that's involved with that, if there's gonna be a little more time involved in a transaction, maybe the origination charges would be, a little more than it would be if there's maybe a simpler transaction that's not gonna require
That
a lot of
makes
time.
sense.
And so, you've got that aspect of it, the origination charges, but yeah, like you were mentioning was, you got your environmental, you've got appraisal costs, you've got, legal costs associated, and this is before you even
break ground.
Absolutely.
You haven't even broken ground yet.
But probably one of the most surprising things is when you're doing a construction is, just knowing all those costs up front and just kind of having like a plan together and
Okay.
budget. And I mean, you really do have to have like a detailed budget to kind of put that together. And, typically these fees, on the bank's end, that's attorney, that's all these, legal costs, the closing costs associated with, acquiring the loan. It could be, 0.25% all the way up to, closer to 3%. Yeah.
Wow.
Yeah. So,
I guess I've heard that points.
Yeah.
I've heard people refer to it as points and
Yes,
things like that.
yes.
Okay.
And so, some of your really large, more complicated deals, sometimes your banker may advocate to have a attorney-prepared doc closing.
Gotcha. Yeah.
And so, obviously banks have their own documentation, but, in
This
this
is so
scenario,
unique, yeah.
in this situation, it is attorney-prepared, and, it's a little more formal, it's a little more, corporate. It's just another layer, another set of eyes, and obviously it's another, level of expense.
Yeah. Yeah. But it's for their protection.
It is. It's it's for the banks, and in some aspects, not just the bank may find something, but you're really perfecting it. And so by adding that layer, because even the bank has different layers within it,
Gotcha.
you have operational staff that really help you get to the closing line and being able to finish that transaction. But having that additional layer with the attorney prepared docs. It's really a good thing.
Gotcha.
So yeah, but the fees are just something that people should be more prepared to spend, and nobody likes to pay fees, but at the end of the day, people pay you to find them a property. People pay you to sell the property because of the value that you provide.
Right.
And so the same aspect as, from a bank's perspective, we provide value. And so, we want to, charge, for that value
you
that we
have to,
provide.
for the time.
Absolutely.
For me, just understanding that you have to take the loan to a committee.
Yep.
It's
a lot of people.
It's a lot of people
It's a lot of
involved
people.
in that process. So, and I was actually going to ask you, what is one of maybe the biggest things, or I don't want to say mistakes, but one of the biggest things that you see people unprepared for, or maybe make a mistake, and it sounds like not being prepared for additional fees on top of the down payment is something you see often.
Everybody likes paying less. Everybody wants the cheapest fees. They want the lowest rates.
They want it for free.
Yeah, but, and you probably don't hear this aspect of it, but, every bank has a shareholder. I work for a bank. I represent the shareholders of the bank, right? And we have an ESOP program, so technically I'm a shareholder of the bank.
Gotcha, yeah, gotcha.
And so, at the end of the day, we're trying to find value in each one of these deals. And so it's not just about, getting these fees and getting interest rates. We're just trying to make a good deal for the bank, but we're trying to do that in a way that, the borrower gets a good deal and the bank. So it's
Right.
really it's a mutually benefiting transaction.
Yeah, it's like the bank is not a loan shark. They're not betting for you to default so they can come get your stuff.
No, I don't want to.
They don't want to do that.
I don't want that.
Nobody
No.
wants to do that.
No.
All right. So be prepared for more fees.
That's not the only thing, right?
Oh, thank you.
Yeah. Well, what's yours?
So the biggest thing that I see people being unprepared for is the down payment.
Okay.
Down payment and business plan. People think that there is a no money down loan for commercial, and they think that it's an SBA loan.
Yeah.
And I hate to tell people that an SBA loan does still have a down payment, and it does require more paperwork. Is not there to be the convenient default
Yeah.
for somebody who is just starting out.
Yeah.
So those are the biggest things. And that's why I want to introduce and talk to you so that
Yeah.
we can educate people about this and have them better prepared. So when they come to me, they don't feel so discouraged.
Yeah.
They know, okay, when I call Yalanda, she's going to know how to put a plan together, and it might require me to slow down my pace.
Yeah.
So, yeah.
I mean, the bank, and I think you would even, say this as well, you just want the other person, to have some skin in the game.
Yeah.
And,
They
and
have
success,
to be. Yeah. Yeah. You have to have some skin in the game. But
Yeah.
You have to have some skin in the game. But I want it to be successful. So
Absolutely.
if
Yeah.
I'm not, I've unfortunately had scenario of getting people in a leased property and then not being able to maintain the lease.
Sure.
And that was very it was disheartening, and it was sad, so
Yeah.
and I do tell people a lot, like, it is our job to help you succeed and be successful. So just the same way you were speaking that you have to be passionate about that person's business, that is one of the first things that I tell the person is, let me get to learn more about what it is that you're trying to do, because if I really understand it and I can be behind it, then I can sell it. If it's something that I don't believe in, I'm not gonna be as passionate about it. And so I do take clients based off of, can we get this to the finish line? And part of that is I tell people that my job is not to show properties. My job is to complete a transaction. So if you're just looking and you want to see properties, I'm not the best agent for you.
Yeah. Well, I mean, there's a lot of technology nowadays where, you kind of know what you're buying in advance to the point where, they're getting with you. They can see it online and they can kind of visualize it, and they can kind of see, possibly if it's, what the property is generating as far as income. And so, yeah, it probably eliminates some time that would be wasted on you, like, viewing the property. But yeah, I mean, at the end of the day, you want to be running around looking at, a bunch of properties. You want to be as efficient as you can in getting the transaction complete.
Exactly. Yep, exactly. Well, that was a wrap, you guys. I'm Yalanda, your Win Winston, your commercial real estate partner, advisor, and negotiator, and I appreciate you sitting and getting to know Ross deal with People's Bank, and we'll see you on the next video.